Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is December 5th, 2014. Doing another hangout with you guys. So let's just go ahead, and the way I want to structure this one is pretty much like the ones we've done in the past. I'm going to go over the indices. I'm going to go over some the trades in our portfolio right now, and then I also want to focus in on some of the bigger name stocks and what they're doing, because oftentimes how they respond to the market is oftentimes the way that the market goes because of their market caps and their influence on so many other stocks. So let's go ahead and talk about the S&P 500. And I'll make this one quick today. I probably won't go the typical 25, 30 minutes like I've been known to do in the past. In any case, the S&P 500, the chart looks healthy. We had that little scare on Friday of last week, and Monday of this week, it turned out to be sort of a bogus, head fake to the downside. The 20-day moving average never even got breached, but the 5 and 10-day did. And that was like the first time since October 16th that the market had finished a day below the 5-day moving average. So there was some kind of concerns. And then you guys hear me, I talk about the T2108 indicator. It's the percentage of stocks trading above the 40-day moving average. It's still not looking all that great right now. You can see that stocks have taken a little bit more of a hit this week versus what the market is indicating. However, it doesn't necessarily mean that the market is breaking down. It's just that basically stocks have regressed a little bit this week, taking a breather. We are in a good, historically, we are in a good month for trading. So that should also be on our thoughts and minds when we're approaching this market. 2008, December was up. 2009, 2010, 11, 12, 13, and 2014 has yet to be written. But if you're going to play the odds, you probably got to play the odds that that the market's going to be up to, in December. So let's look a little bit more at the S&P 500 right now. I mean, the market hasn't been the most favorable market this week. We've had some up days, but it hasn't really been like strong. It hasn't had the gusto, even like from what we saw heading into Thanksgiving week, where the market did pop higher. Basically for 10 straight days here, you go back to 1121, this market has been in a trading range. We popped on 1121 for about 2 days, but since then, it's basically been a 10-day trading range where the market has basically done absolutely nothing in terms of price movement. And that's okay. I mean, the market needs to do it because, I mean, if you look at the move that the S&P has made since the middle of October, it's historic. I mean, it is big. Okay, we've gone from, I think it was 18. What was the lows back on the 15th? It was the lows of 8, and we've gone all the way up 250 points up to 2077. So the market's made some pretty recent months, but at some point it does have to cool down, and it's really not even cooling down all that much. I mean, you look at this 10-day consolidation pattern. That's not, it's not uncommon for the S&P 500 to consolidate some. It can't go up at all, all the time. So some consolidation is good. But what it does, though, for positions in the portfolio, when you look at some of the positions we have, we're all long right now. I'm 60% long. There's a good chance I'm probably going to cut 1 to 2 positions before the close just to lessen our exposure some. But overall, I mean, I feel pretty good about this market. But in terms of cutting exposure, it would be basically cutting the stocks that just aren't behaving correctly for us right out of the gate. But because there is some back and forth in this market, you're going to have some give and takes. You're not always going to see, huge, bursts in price where the stock is moving up 3-4% a day because, it has the underlying strength of the market. Instead, you're going to see some churning, and you gotta sort of wade through those times in the market and not let yourself take, unnecessary losses. You basically stick and move, you make moves, and you make counter moves. And that's what you're really doing in this market. You're positioning yourself for when the market makes the next move. If it makes it to the downside, then we're going to obviously reduce our long exposure and start setting up some short positions. If it moves to the long side, we're going to ride our current positions and maybe add 1 or 2 positions. Either way, you have to be able to move with the ebbs and flows of this market. So So that's the S&P 500 right now. Just quick glances at the NASDAQ. You can see it's similar consolidation in the NASDAQ. And also when you look at the RUT, I mean, even more so of consolidation. This one goes back to the beginning of November. It just really hasn't gone anywhere. And that's been pretty much the theme for the Russell the entire year. It just doesn't move at all. I mean, it's had a wide range, but it hasn't really made a breakout at all. And the market's pretty much ignored it in large part. So the rallies have been in the smaller cap stocks and so forth. Let's look at a couple of our positions here. GLW, this one's doing all right. I mean, it's because of the market's not, showing a strong push right now. You're taking smaller incremental moves in the market. And no, I'm not going to resort to trading the cheapo $3 stocks that, have $100,000 in volume, because that's really where people, when the market's churning sideways, they start resorting to these cheap dollar stocks because they can't get, the desired moves out of some of the bigger stocks. And so they go into these things and they start losing 10, 15%. And you got to ask yourself, was it worth it, or was it worth just being patient for the market to line up and start moving in one direction or another, and then be positioned accordingly for that move? So don't resort to going into these like 3x ETFs, or resist going into these things. I mean, don't go into 3x ETFs and dollar stocks just because you're looking for some kind of action out of the market, because the disciplines of a trade requires you to be patient when the market's telling you to be patient, and to be aggressive when the market's wanting you to be aggressive. And right now it's telling us to be patient. It's been in a 10-day range, and there's no reason to really try to force gains out of the market that might not be there right now. So like I said, though, we're in a historically a good month for trading. December tends to have what they call the Santa Claus rally, and I think there will be probably some upward price movement before the end of the year that we'll be able to capitalize on. But staying patient and wait for that opportunity is key. So GLW, I mean, the chart still looks good, and this is what we have to do with our trades right now. You have to judge them based on their merits. GLW still looks good. You got the inverse head and shoulders breakout. It's holding some of the good short-term moving averages like the 5 and 10 like a champ. So there's no reason why we probably won't be holding that one over the weekend. Then you get like into Microsoft, and there's definitely a clear, like a cup and handle breakout that's probably more well defined on the 30-day or on the 30-minute chart on the MSFT. You have this nice inverse head and shoulders pattern down here. So you got the left shoulder, the head, the right shoulder, and so it was breaking out yesterday. That's where we got in, but then now today it's struggling. But if you take MSFT and you look at it from a trend line standpoint on that 30-minute chart, it's actually holding the trend line pretty good, and not giving us a reason to just dump the stock and move on. Though I'll be the first one to say I'm not thrilled about the price action today. I thought we'd probably see some upward momentum out of it, particularly if the market actually did move 3 or 4 points like it is today. Then you have IBM, and this one, this one probably will take a little bit more patience than some of the other stocks, because you have this huge base. I mean, it's been getting creamed since October. I mean, it's not balanced with the rest of the market. It had the gap down from the earnings. But what you have there is a very nice base that has formed, and it's pushed out of that base. Now today it's challenging that trade setup by trying to break below the base. But if it can hold that, I think it's worth holding over the weekend as well. CBS, it's giving back some of the gains today. The market's just really not showing a lot of conviction. So, when the market's not showing a lot of conviction, some of your gains that might have been there in the morning are pulling back some. It does have good volume, and I think really what you got to do is just see how it responds in the afternoon. Does it try to make up for some of these gains? Because it got way outside the R3 pivot point up here, which is usually a sign of overextension. But, the trade setup's still there. I mean, it broke out, and it's holding that 55 level so far. Then you got TEVA, and this one, it's done nothing to disappoint so far. It's been a slow, steady gainer with the way the market's moving. It's breaking out of that base. You could say it's really like a bull flag that it's breaking out of, and doing quite well. So, like I said, be patient with this market. The market's not always just going to wave its magic wand on your portfolio and say, "Hey, I bless you with profits abundantly." I mean, the part of the trading is knowing the limitations in the current market, and right now that's what we're trying to do. We have to know the limitations of this current market. If you get too aggressive and you start trying to get into some of these cheaper, high volatility, uncontrollable risk type stocks, then you're going to pay dearly, because these times where the market's churning is really where traders do get themselves into trouble, and I don't want you to do that. So stick with the plans that I'm putting out there. Stick with the tight risk that I'm putting on pretty much every one of these trades. I mean, some of them are like 1.5 to 2% risk on each of these trades. So stick with it, and I'm sure you'll do pretty good, as the market progresses into the end of the year here. AAPL, and I said I wanted to talk about some of the stocks that are a little bit bigger, a little bit more influential on the rest of the stocks. And of course, there's probably none that's bigger than Apple. It's consolidating recently. It had a heavy sell-off on Monday, but it's bounced back a little bit. But you can see it's not just breaking down. Now, if it drops below like 113.25, then yeah, I'd say that there's some major cause for concern in Apple. But so far, I think it's pretty good. It's holding the 20-day moving average like a champ, and I don't necessarily see a really solid trade setup, but if it can just maybe move into the 116s, maybe like 116.50, you probably have a good chance for it to try to make a run to 120. Then you have Goog, G-O-O-G, and it's just, it's been horrible for the last 3 months. It's just not done anything, and it looks like it wants to actually move even lower based on the action that we're seeing today, where it's breaking below a key support level at around 529. It's trading in the 527s, and definitely don't want to be long on this. Don't want to catch the falling knife. And if you're short, then there actually is a risk set up there. I mean, you can short it at 527 and put a stop loss probably like around 542. Excuse me. AMZN, Amazon. This is another one like Google. It's just struggled. I thought maybe it was turning the corner here when it broke out, but it's given up those gains and it's trading back below that descending trend line there that it had broken previously. NFLX, Netflix. Another one very bearish looking. So you can see some of these big name momentum plays have taken some hits in recent days. Netflix being one of them. And then you also have, and I wouldn't be trading Netflix at all to the upside. There's just too much overhead resistance, especially when you look at the resistance that's right here at 375. Tesla, that's another momentum play that's just really taking a beating. I mean, you look at this here, you got a left shoulder, a major head, and then you have a right shoulder right there, and you can draw this neckline right across. I mean, this is textbook head and shoulders material right here. And what you're dealing with is a stock that if it breaks below 222.70 or so, this thing's going to drop like a rock. And then finally, BABA, the one that people are just loving to trade these days. Two ways to look at this, okay? And I'm going to be as objective as possible here. Okay, you got a bull flag. That's one way to look at it. And it's not a wrong way to look at it. But what you also have here is you also have a series of lower lows and lower highs, which begs to ask the question, is this thing rolling over? Considering the fact that it's gone to 85 all the way up to 120, and it's currently sitting at 108.50, there's a lot of room for it to still pull back. So my big concern on this stock here is if it probably breaks the lows from Monday or the closing price from Monday. So if it breaks below 106, probably not a good sign for the stock moving forward. So there you have it. That's the stocks that I wanted to cover today. The market analysis. Once again, be patient with this market. We're stuck in this consolidation for like 10 days. We've seen it in September. We saw it in July, and the patience is what gets you through these times. And if you have any questions, feel free to email me, Ryan@shareplanner.com. I'll be catching up on some emails this weekend because I've been getting a lot of them of late. And if you haven't tried it yet, try SharePlanner out. Free 7-day trial. Great group of traders in there. Lots of good knowledge that you can pick up. I also provide my real-time trade alerts in there, and I also send them out to you via text and via email. And that's for international folks too. So anywhere in the world you can receive my texts and trade alerts. So if y'all have a great weekend, and God bless.